Today we are looking at planning and adjusting the adjusting entries. We are going to prepare the unadjusted trial balance, and then we are going to adjust the supplies and prepaid insurance. So let's just go ahead and talk about what accounts need to be adjusted at the end of the time. And the accounts that you'll be looking at adjusting are going to be your supplies account, your prepaid insurance, which we've already talked about, we've done last chapter or last unit. And then because we have a merchandising business, we are going to also adjust the merchandise inventory, the accumulated depreciation, which is writing off. So as equipment's being used, it's going to wear down and you write off portion of that each year. Your interest receivable. And because we're a corporation, one of the things that's separate to corporations is a federal income tax payable section. And so let's go ahead and look at today's lesson. We're going to first start with preparing the unadjusted trial balance, which is just recording what are the balances of all your accounts on one sheet. And so our unadjusted trial balance is just recording what is everybody at, what are each of the expenses. Some of them may have zero, and that's just fine. So you'll write your account titles, you'll write their balances either as a debit or credit, and then you'll total up the balances at the bottom. So the 4 questions that you should be asked when you're analyzing adjustments for supplies is, what are the balances of the accounts being adjusted? So what was the balance of the account is going to show what we started off with in the year and what amount we've added to it throughout the year. The balance, what balance should be in these accounts is what balance is currently recorded in that account or what we have in supplies. So when we have some supplies being in use, those will be recorded as well in inventory. And then what must be done to correct the account balances? So do I need to use subtract and find the difference? And then what adjusting entries are made? So let's go ahead and look at it. We have what this scenario is talking about is that, okay, on December 31st, our accounts say that we had $4,548.17. But when we did our inventory and did our looking at our budgets, we found out that there was actually $610. So that means there was a difference of $3,938.17. So we need to adjust by that difference. So we need to lower the supplies office and increase our supplies expense. So let's look at supplies expense store. So the same idea is going to happen. We have our balance that we have recorded in our books of our starting amount plus what we've added throughout the year. What we actually have in hand is $465. That means we need to find the difference between those two. And $4,584.61 was used for supplies store throughout the year. And we need to adjust our account accordingly and subtract that amount out. So we found those numbers, our starting amounts on December 31st, by off of our unadjusted total. That's from your trial balance, so just recording what's in the account. The general ledger of what we need to do is what we subtracted and found the difference between actual and what we started with. So this number comes from the difference between what's actually on hand and what we said we should have had on hand. Actually on hand is going to be given to you. And you will always debit the expense account and credit the asset account, which is your supply account. So we are going to do prepaid insurance adjusting entry. And so based upon our balance of what we've added to and where we started off at, on our unadjusted trial balance, it says that we had $11,000. But when we look at what we actually have in that account, we have $2,800. Give us a difference of $8,200. That's what we need to adjust our account with. So we subtract these two, that gives us our adjustment, and that is what we do for our expense. So insurance expense and prepaid insurance. So prepaid insurance is the asset. Insurance expense is the expense account. So the expense gets written as our debit, and the asset part gets written as our credit. And remember, this number was the difference. This was the starting amount. That's where we found the starting amount. So which adjusting entry is unique to a corporation? Select your answer. Federal income tax expense. The 4 questions that you use to analyze the adjustments of an account are: what balance of the account is being adjusted? What should the balance be for the account? So what balance should be adjusted is off of the unadjusted trial balance. What should be the balance of the account is what we have on hand, or what we have in hand plus what's in an account for it. What must be done to correct the account balance? So subtract and find the difference, and then make the adjustments. Which accounts are used for the adjustment to office supplies? Supplies expense office and supply office. The expense account is your expense account, and the other one is your asset account. Which accounts are used for the adjustment to prepaid insurance? Insurance expense and prepaid insurance. Let's go ahead and go to our assignment and do the work together. So there's 2 parts to this. First is we're going to be doing the unadjusted trial balance, but they were very kind to us and didn't make you fill out the entire trial balance, but you do have to fill in some blanks. So we need to find the blanks that we need to fill in. First off, we're going to start with identifying the sheet. And so this is Southside Electric for December 31st of current year, which is what the dash is. And so Southside Electric. This is the unadjusted trial balance. And this was for December 31st of 2000 ... So if we go through these, you'll see that they match up: cash, cash, petty cash, petty cash, accounts receivable, accounts receivable. We get to the next account, allowance for uncollectible accounts. It's not recorded, so we need to go over here and do the allowance for uncollectible accounts. Then we need to take and find out what balance it is. So the balance was $48.67 as a credit. So $48.67 recorded as a credit. So merchandise inventory is taken care of. Supply office is taken care of. The next thing is supply store. Supply store is our asset account for supplies. It has a debit balance of $4,483.62. And then we have prepaid insurance, notes receivable. Interest receivable is left blank. So let's look and see what's happening on interest receivable. It has a 0 balance. Then we have office equipment. Office equipment is okay, we've got it filled out, but the accumulated depreciation of office equipment is left blank. So we need to find that asset and go ahead and mark off the credit of $23.95. So this is stuff that we've written off on the accumulated depreciation of our equipment in the office. So like copy machines, it could be computers, it could be other major equipment that we need for our business. And we keep going down. The next thing that we have is federal income tax payable is missing. And that has a 0 balance, so I'm not putting anything there because 0 balance I do not have to write. Keep going down, income summary. This one should be 0 because we have not started filling into that, and we're going to be using that here coming up. And then we go on down, and we get down to some of our expense accounts. Depreciation of office equipment. And there was nothing written there. Depreciation expense for store equipment. Nothing's written there. Next one we have is insurance expense. And we have a 0 balance again on that. We're going to be using those here soon, so they will be filled in. And supplies expense office is 0. Supplies expense store, 0. Uncollectible accounts is 0. Now we're at the bottom of the page. And so at the bottom of the page, we need to do our totals. Oops. Now, to do your totals, all you're going to do is add up each column. So you're going to add up all your debits, and you're going to add up all your credits. This is a time when I would use a spreadsheet to do my totals because it will let me see and make sure I don't have any typed in incorrectly, and will help me keep from having to do this multiple times. And so I can go back and find my error a lot easier. So I'm going to go ahead and pause with a question here so you can answer the number. What total did you come up with for your debit, and what total did you come up with for your credit? It should have matched. So just write it in the answer. You should have come up with $624,362.52 for both totals. And they will match. If they do not match, go back and total again and figure out what the right answer is. So let's go ahead and grade step 1 and go on to the next step. We're going to journalize the entry. And so here is where it's giving us our adjustment data. So I told you this information is going to come into play. This is what's actually in hand. We will have to use the unadjusted trial balances to find what we record there. But this is actually what we have. And so we need to find the difference. So office supplies is our asset account. And remember I said your asset account is going to be the credit account. In this case, as we are offsetting it. And the expense account is going to be your debit. So let's find out the difference between office supplies. It says office supplies was $3,108.08. What we should have is $548. So when we subtract those, we come up with $2,560.08. So when we subtract office supplies, this number, and the office supplies number over here, that number is $2,560.08. And the way it's written in your journal, we've already started off with December, so we don't have to write December again. But you're going to write 31. And we are going to write in the expense account. So the expense account is supplies expense, and this is for our office. The credit account is just your supplies expense account. It's not supplies expense, it's supplies account, which is your asset. And that's going to get the same number, 2560.08. And it should automatically adjust it in. So let's do our next one. So our next adjustment we need to make is we need to do the store supplies. We show that we have $640. What our trial balance shows is we have $4,483.62. So we need to take this number, $4,483.62, minus 640, and we come up with $3,843.62. And so we are taking care of our store supplies. So our asset account is supplies, store, and our debit account is supplies, expense, store. Now, our last one we need to do for this set is we are going to be adjusting our prepaid insurance. So we show that we have $1,600 in the account for prepaid insurance. And we need to find our prepaid insurance, and I scrolled too far. And it was $11,200 that we've added into and had started up for the year. So we need to take the unadjusted trial balance of $11,200 and subtract $1,600. And when you do that, you come up with $9,600. So our expense account, again, is listed first. So insurance, expense. Sorry for that interruption. Insurance expense is our debit account, and then prepaid insurance is our asset account. And so that's our credit account, because we're removing money from that account and moving it over to the expense account, what we've used. And so we're going to grade this final step, and the period is yours to work. So make sure that you go in and record your expenses, and remember how you find the number here was subtracting the adjustment data and the unadjusted trial balance.